Hello and welcome back to the channel. I'm Algabot, and here we break down automated trading strategies for MetaTrader 5 in plain, educational language. Today we're looking at an expert advisor called Rsi Exhaustion Pin Reversal. It's a counter-trend approach that blends one classic momentum indicator, the relative strength index, with a single, well-known price action candle known as the pin bar. By the end of this video, you'll understand exactly how it spots a stretched move, how it confirms a reversal, and how it manages its risk. Everything here is for educational purposes only and not financial advice. Let's dive in. So what exactly does this expert advisor do? At its heart, Rsi Exhaustion Pin Reversal is a mean reversion strategy. Instead of following a trend, it looks for moments when a one-sided move has become stretched and may be ready to turn. To find those moments, it relies on just two ingredients, and that simplicity is intentional. The first ingredient is the Relative Strength Index, or RSI. RSI is a momentum oscillator that moves between 0 and 100. When it sinks toward the lower end, it suggests sellers have been doing most of the work and the down move may be running low on fuel. When it climbs toward the upper end, it suggests buyers have been stretched instead. The second ingredient is the pin bar, a candle with a long rejection wick. A long lower wick shows that price was pushed down during the bar, but buyers stepped in and lifted it back up before the close. A long upper wick shows the mirror image, where sellers rejected higher prices. The strategy only acts when both ingredients agree on the very same closed bar. Stretched momentum without a rejection candle is ignored, and a rejection candle without stretched momentum is ignored too. That double requirement is the whole point of the design, because acting on RSI alone can mean stepping in front of a move that simply keeps extending. This style suits a patient swing or mean reversion trader who is comfortable trading against the immediate move. The defaults are tuned for a mean reverting major currency pair such as Euro, US dollar or Australian dollar, US dollar, on the 15-minute or 30-minute time frame. As always, this is educational information only, and every approach carries the risk of loss. Let's walk through the exact logic, step by step. The expert advisor works on closed bars only. Once a bar closes, that finished candle becomes what the code calls the signal bar, and the strategy evaluates it. First, it checks momentum. It looks back over the most recent RSI readings, a window set by the extreme look-back parameter, which defaults to 3 bars. For a potential long, it asks whether RSI dipped to or below the oversold level, defaulting to 30 at any point in that window. For a potential short, it asks whether RSI pushed to or above the overbought level, defaulting to 70. This is the exhaustion check. Second, it inspects the shape of the signal candle for a pin bar. It measures the range, the body, and the 2 wicks. For a bullish pin, the lower wick must be at least 1.5 times the body, set by the WickBodyRatio. It must be longer than the upper wick, and the candle must close in the upper portion of its range, controlled by the close position fraction of 1/2. A bearish pin is the exact mirror, with a dominant upper wick and a close in the lower portion. Only when both the exhaustion check and the matching pin bar appear together does the strategy act. For a long, that means RSI was recently stretched to the downside and buyers visibly rejected the lows. For a short, RSI was recently stretched to the upside and sellers rejected the highs. Now the risk. The stop placement is structural, not based on fixed points or pips, so it adapts to any symbol or time frame. For a long, the stop sits just below the low of the signal bar, buffered by a fraction of that bar's range set by the stop buffer fraction. The idea is simple. If price trades back through the very wick that was supposed to reject it, the reversal idea is no longer valid and the position is closed. The take profit is a fixed multiple of that stop distance, set by the reward ratio, which defaults to 1.6. So if the stop is a certain distance away, the target sits 1.6 times that distance in the other direction. Finally, there are 2 housekeeping filters. The strategy holds only one position at a time per magic number, and it skips a signal if the current spread is wider than the max spread point setting. This keeps entries clean and avoids trading in poor conditions. Let's read the actual MetaTrader 5 code on screen, just as you'd see it in MetaEditor. At the top are the inputs. RsiPeriod sets the smoothing of the oscillator, defaulting to 14. OversoldLevel and OverboughtLevel, 30 and 70, define the exhaustion thresholds. Extreme lookback is how many recent bars the RSI extreme may have occurred within. Wick body ratio and close position fraction shape what counts as a valid pin bar. Stop buffer fraction and reward ratio control the stop and target and max spread points, lots, and magic round out the settings. Now the long block. The condition reads, if oversold recently and bull pin. That bull pin flag, defined just above, is true when the lower wick is long enough, dominates the upper wick, and the close sits in the upper part of the range. When both parts are true, the code reads the ask price as the entry, places the stop just below the signal bar's low minus the buffer, checks that the risk is positive, sets the take profit at the entry plus reward ratio times that risk, and calls trade.buy with the volume, stop, and target. The short block is the exact mirror. The condition reads, if overbought recently and bear pin. The code reads the bid price, places the stop just above the signal bar's high plus the buffer, sets the take profit at the entry minus reward ratio times the risk, and calls trade.sell. Both sides share the same structural logic, just flipped in direction. Let's bring it all together on this illustrative chart. Across the bottom, you can see the RSI panel, with the oversold line at 30 in green and the overbought line at 70 in red. Up top are the price candles. Watch how the two move together. We begin on the left with price drifting lower. The first few candles each close near their lows, and as they do, the RSI line in the panel below slides steadily downward. By the third candle, RSI has dropped below the 30 line into the oversold zone. This is the exhaustion check starting to line up. On its own, though, this means nothing to the strategy. Remember, stretched momentum alone is never enough. Now look closely at the next candle, our signal bar. Price initially pushes lower again, dragging down to a fresh low, but before the candle closes, buyers step in and drive price back up. The result is a candle with a long lower wick and a small body sitting near the top. That is a textbook bullish pin bar. The lower wick is well over 1.5 times the body. It dwarfs the upper wick, and the close lands in the upper part of the range. At this exact moment, both conditions agree. RSI was recently oversold, and a bullish pin has appeared on the same bar. So on the open of the following candle, the strategy places a long entry, marked here in green. The stop is set just below the low of that pin bar, with a small buffer added beneath the wick. The take profit sits above, at a distance of 1.6 times the stop distance. From here, price begins to recover. The next candles close higher and higher. RSI lifts back toward the middle of its range, and a few bars later price reaches the take profit level, marked in gold. That completes the long trade, a stretched, oversold move, a visible rejection of the lows, and a measured target. Now the chart keeps climbing, and the second setup begins to form, this time to the short side. As price grinds higher, the RSI line rises with it, eventually pushing above the 70 line into the overbought zone. Again, the exhaustion check is in place, but the strategy waits for confirmation. Watch the signal bar near the top. Price spikes upward, reaching for a new high, but this time sellers reject it. By the close, price has slipped back down, leaving a long upper wick and a small body near the bottom of the candle. That is a bearish pin bar, the mirror of the one we saw earlier. The upper wick is more than 1.5 times the body. It is longer than the lower wick, and the close sits in the lower part of the range. With RSI recently overbought and a bearish pin on the same bar, both conditions agree once more. On the open of the next candle, the strategy places a short entry, marked in red. The stop goes just above the high of that pin bar, again with a small buffer, because if price trades back above that rejected wick, the reversal idea is no longer valid. The take profit sits below, once more at 1.6 times the stop distance. Price then rolls over. The following candles close lower. RSI eases back down out of the overbought zone, and price reaches the downside take profit, marked again in gold. Notice the symmetry. In both trades, the strategy waited for the same two things to line up on one closed bar, a stretched RSI reading and a same bar rejection candle pointing the other way. The stop always sits just beyond the rejected wick, and the target is always a fixed multiple of that risk. This is illustrative only, of course. Real markets produce Messier candles, and not every signal behaves like this. Losses are a normal part of any strategy. And that brings us to the end of our breakdown of the RSI Exhaustion Pin Reversal Expert Advisor. We covered how it uses the RSI oscillator to spot a stretched, exhausted move, how it waits for a same-bar pin bar to confirm a rejection, and how it builds its stop and target around the structure of that signal candle. We also read through the MetaTrader 5 code for both the long and short sides. Everything in this video is educational content only and is not financial advice, a recommendation, or a solicitation to trade. If you found this analysis helpful, please consider liking the video, leaving a comment with strategies you'd like us to break down next, and subscribing for more MT5 strategy analyses. You can find more at www.oversoldLevel. Past performance does not guarantee future results. Trade responsibly.